We have with us the management of L&T Infrastructure Finance, Mr. Suneet Maheshwari, the MD and CEO, joining us from Mumbai. Sir, great to have you with us. Thank you so much for taking our call. What do you make of this report which has appeared in today's papers about private infra firms being allowed to issue tax-free bonds? The approval has already been placed. In the past, we have seen companies come out with tax-free bonds and have been successful at large as well. What's the difference this time? I think there's a clause in the finance bill which talks about a bit of a relief for infra companies. What's your reading of the same?
I think it is for infra, as I read it, it's for infra financing companies and not just infra companies. That's the perspective I have. Having said that, I think it's a little, what we do realize is that the wordings that are there in the budget, this thing, are more inclusive. They offer some flexibility. Earlier they were restricted to government companies and financial institutions. Today they allow probably something more. We are awaiting final clarifications from the government on this aspect in terms of how it will be operationalized before we can really make a comment conclusively. But it seems to me that there is some flexibility that is available, and it might be that infra financing organizations could get some benefit into that.
Do you think there's enough appetite, not from companies but from investors who look at such instruments as viable alternatives to FDs and to other instruments to actually park their investments? And even for companies, do you think this would help to manage the huge amount of requirement that is there for funds in the infra space?
I think for infra financing organizations, making this availability to them is a good way, because earlier for infra financing companies there was a tax saving bond. Now that has been discontinued, and maybe something under this window might be available. So it is definitely something of use. There are investors, as we understand, there are investors who definitely look at this tax saving and prioritize infra in kind of instruments. If we want to encourage if we want to encourage savings in the area of infrastructure, then I think something like this will definitely incentivize investors to do that.
In the past, we've seen that annual limits have been given out for tax-free bonds, and companies did come out with issues, but then after series 1 or 2, then the companies didn't really come out with more issues. Is there not enough demand as far as retail investors are concerned? And secondly, where does the demand come from? Is it the retail investor which participates in aggressive form? Is it HNIs? Or do you think there is a separate category which is waiting for more relaxation in norms before we see fresh inflow of money coming into the sector?
So two things. Number one, the tax saving bond had only retail investors. But since that has been discontinued, we are talking only of tax-free. Tax-free has retail and also larger HNI kind of investors. Second, the issue is that people don't look at people also look at who is the issuer. It's not just the usage. So if they see a good name to be issuing it, whether it's for infrastructure, then I think response increases.
Mr. Maheshwari, let me get your thoughts on how much funding requirement is there, because if you look at the last 2 years, the sector has been in virtual doldrums. You take a look at the IIP growth statistic for the last 4 or 5 months, actually it's been very dismal. Only the last one we saw some improvement, but then can't really say that's a sustainable turnaround. How much investment does the sector need as of now to jumpstart projects which have not really moved on, projects which have been sitting on approvals but because of lack of funding have not been able to move at all?
I think what we need to work on right now is to debottleneck existing projects under implementation. Some of them don't really need new, fresh groundbreaking. If you just get them all started off, there is enough activity that is going to happen. The second thing right now that is needed is the investment appetite of those infrastructure developers is impacted, either for some policy implementation aspect or clarification, or because payments are not received from various kinds of organizations in respect of all the infrastructure provision that has been done. Either energy companies, power companies have not been paid for the power they have supplied, or people under EPC contracting companies have not been paid for their jobs. So there is a lot of shall we say, fund flow that is supposed to happen that could release the private sector developers to actually finish the projects that they have taken up, as also maybe take up something new. So in the here and now, I think these are the two things I would suggest. If new projects have to be done today, considering the investment climate is kind of impacted, probably EPC jobs are more likely to yield quicker results. Having said that, I think investment projects should be planned, because if you start planning them today, it will take you at least 6 months to a year before they can come on the drawing board for investors to consider.
Right. What's your reading on what the RBI might do tomorrow? I know that it's always a big if, and it's a difficult call to speculate, because RBI's job is, I think, perhaps the toughest right now in the country. In your opinion, what might the RBI do tomorrow? Do you think there could be a scope for a rate cut of about 25 basis points?
Well, it's difficult to second guess, but I am hopeful that something will happen.
Okay, all right, Mr. Maheshwari. Thank you so much, sir, for joining us to talk about the issue of tax-free bonds, and do we actually see enough appetite, whether it's the corporate sector or from the investor side, as far as tax-free bonds are concerned. Thank you so much, sir, as always. We take a break now, we come back with more.